To order and continuing our hearings on Bill C-74, the Budget Implementation Act for the February 2017, 18th, February 27, 2018 budget. So with us this morning from the Department of the Environment is Associate Assistant Deputy Minister Mr. Moffat. From the Department of Environment, Mr. Jaguar, Manager Legislative Policy. Department of Finance, Mr. Mercel, Sales Tax Division, Mr. Turner, Tax Policy Analyst, and Mr. Colomb, Director, Sales Tax Division. I think we've had the remarks previously. Is there anything anybody wants to add before we start to questions on Greenhouse Gas Pollution Pricing Act, Part 5 of the Budget Implementation Act? No opening statements? All right. Going to questions. Do I see none? Mr. Dussault.
Thank you. I'll ask my first question. First of all, it might be Mr. Coulomb, I think, first of all, but on excise tax, that's my first question. Also on HST and the excise tax on cannabis, rather. So that's, and the sales tax. So I'd like to know in what way this works on medical marijuana, if a person has a prescription, and how this will work for the exemption on the HST.
So we'll stick to the Part 5, which is the Greenhouse Gas Pollution Pricing Act. So do you have anything on that? We'll come to, we'll go back and forth on these questions in any event. So hold that question until we can get somebody on the cannabis section of the bill. Mr. Polyev. Mr. McLeod next.
Has the government calculated how much this tax, when fully implemented, will cost the median income Canadian family?
So yesterday, as you all likely know, the government released a study titled The Estimated Results of the Federal Carbon Pricing System. That study explains that it's actually not possible to do precisely the calculation that you just asked about, because the final cost to Canadian, or the final impact on Canadian households, will depend on what choices provinces and territories make about the system that they design, first, and second, the way that they use their revenues, and those decisions have not yet been made. So the study that was released yesterday provided one scenario in which the federal carbon pricing system was applied in all 9 jurisdictions that currently don't have a pricing system. But we know that that will not be the case. Many provinces have already indicated that they already intend to develop their own pricing system. And until we know the details of their system, we will not be able to estimate the impacts of those systems.
We are.
I haven't seen that study. What's the name of the study, and can you make it available to the clerk?
Yes, absolutely. We can. The study is entitled Estimated Results of the Federal Carbon Pricing System. Minister McKenna released it yesterday, and it's available online, but I'll certainly send the link to the clerk.
Okay. Mr. Polyev.
We're debating the Budget Implementation Act, which would implement a federal carbon tax in jurisdictions, provincial jurisdictions that don't have their own. So where that federal carbon tax is implemented based on the $50 a ton rate that it will reach in 2022, how much will that cost the average Canadian household?
Well, again, what we do know is what the cost impacts will be for various commodities. For example, a $10 a price, $10 a ton levy translates to about 2 cents a liter of gas.
Sorry, don't mean, the question relates to the cost per household. We've already gone through the fact that gas prices will go up by roughly 11 cents once this tax is fully implemented. We also know that household home heating bills will go up by about $200. The question is, and you do have the answer, how much will it cost the average Canadian household to pay the total tax on all goods?
We currently don't have that estimate, and I think the impact on households will depend on how the jurisdiction decides.
The specific question was
Mr. Polyev, let Mr. Moffat answer, then you'll have ample time.
I'm sorry, I was
We
just
get
going to
lots of time.
repeat that the impact will depend on how the jurisdiction uses the revenues.
and I'm talking with the federal jurisdiction, which is your domain.
Yes.
And so in the federal jurisdiction, which is the exclusive focus of my questioning, how much will it cost the average Canadian household to pay this carbon tax?
Again, that depends on how the jurisdiction uses the revenues, which the federal government is obliged under this law to return to the jurisdiction of origin.
But you also have under this act the ability to return it directly to the people. So in other words, to administer the full carbon tax and expend its proceeds. So we are, again, I know you keep trying to shift it back to other jurisdictions in order to externalize responsibility for the question, but I'm exclusively asking about the federal government. This bill empowers the federal government to collect a $50 a ton carbon tax. And you do know what that would cost the average Canadian household. Can you please tell Canadians now?
I'm going to repeat the answer. It depends on how the revenues are used. And the government has not decided how it will use the revenues, and it is authorized to return the revenues entirely to the government.
That's not true. Your officials briefed us after the bill was first introduced that the federal government would have the ability to either direct the funds back to the population going around the provincial governments or give it to the province. Now you've said something completely different. You've said that the money will have to go to the provincial government.
That's not what I said.
So you see, well, actually,
I was the one who briefed you, and I just made the statement that the bill requires the money to go back to the jurisdiction of origin, not to the government, to the jurisdiction of origin.
Okay, good.
The bill authorizes the government to return the money to the government or in other ways.
So I think there's an easy way to get to the answer then. How much would the federal government have to return to the average Canadian household to compensate for the full cost of the carbon tax?
I don't have that number available. I can tell you,
Has it been calculated?
though, that no.
So you're telling me that Finance Canada has not calculated what the original cost of the tax at $50 a ton would be?
I can't speak for Finance Canada.
Has any department done that?
Want to take a stab at this, and Mr. Polyev, we can switch questions around, and we'll come back to you whenever you want to take a break. We'll go to somebody else, and we'll come back to you. Anybody else can answer this question from finance or environment? Mr. Colum?
In respect of the study that was released yesterday, I'd like to say that the expertise in environmental matters and modeling capacity with respect to GHG emissions rests with Environment and Climate Change Canada. As a result, they have been the lead department in developing the economic impact estimates related to the current carbon pricing system. Of course, that said, given the nature of this policy, financial officials have been working closely with colleagues with Environment and Climate Change Canada. So we invite the committee to have a look to that study that was released yesterday, and we hope that this will help you reviewing the proposal.
And according to that study, how much would the carbon tax, when fully implemented, cost the average Canadian household?
Okay, there, John.
Sorry. The study does not provide that calculation.
So are you, so I've got here documents from Finance Canada, and I quote, the memo, it's a memo. It says, the memo focuses on the potential impact of a carbon price on households' consumption expenditures across the income distribution. Key findings are blacked out. Now, I know that Finance Canada is now under investigation by the Information Commissioner because of its failure to release this information, which obviously does need to be released in the public interest. This table that is blacked out would show how much families of various income levels would pay depending on the price of carbon. You have this information. Can someone up there tell us what will be the cost of the carbon tax to the average Canadian family?
I can tell you that that memo that you're reading was not written about this bill.
Of course not, but it apparently was written about the cost of a carbon tax to families. And this memo further has a table wherein scenarios are laid out, another table in which scenarios are laid out, and the scenarios are based on different levels of cost per ton of carbon. So you have calculated how much a carbon tax would cost a given family, depending on the cost of the price of the carbon tax. So, can you please tell us what that cost is to an average family?
I'm afraid we can't tell you that at
Why?
this time. I'm afraid I'm going to repeat myself, but the impacts depend, and I'll elaborate a little bit. The impacts depend, first of all, on the direct impact of the carbon charge on commodities that a household purchases, such as gasoline. The impact also depends on the cost of goods that are produced by large industries that will not be subject to a carbon charge, but that will be subject to the output-based pricing system, which will relieve those industries of a significant portion of the carbon charge on their emissions. It will charge them on the margin of their emissions. And while we have laid out the authorities for that system in the bill, and we have published a number of papers proposing an overall approach to those to that system, we're in the middle of consultations to develop the actual standards that will be the heart of the output-based pricing system, and that will actually determine the impact on the price of commodities and goods that are made by those industries. So we don't know the details of that yet. And then third, again, the impact depends very significantly on the way that revenues are returned. And we know that in other jurisdictions, in jurisdictions that have pricing, in some cases households are made completely, their costs are completely covered. So Alberta estimates a direct impact on households ranging from about $280 to $500, and they've committed to return all of those direct costs to about 60% of households in Alberta. So it's tailored to low income versus high income.
Again, I'm asking about the federal price. We are here today to discuss Bill C-74, which is federal legislation to impose a federal carbon tax in provinces that don't have their own. Now, you claim that the impact will depend on how the revenues are used. We as parliamentarians cannot judge whether average Canadian families are made whole by any expenditure of those revenues unless we know the original cost that those households must pay. So our simple question, have any departmental officials calculated how much Canadian families at various income levels will pay on the original carbon tax if imposed at a federal level as this bill prescribes? Yes or no?
Moffat is in a position of giving a yes or no answer, Mr. Poilievre.
I appreciate you. I appreciate you coming to assist him. But these are the officials.
I'm not coming to
these
assist
are the officials who are supposed to answer these technical questions. This is actually one of the most basic questions that any officials would have whenever you introduce a tax measure. The government has its budget book, which is able to calculate out every other tax measure that it introduces for the purposes of public relations. But when they're increasing taxes, we can't get any answers. So these officials at this table would know if this modeling has been done. And I'm asking them, any one of them, to tell us, have you, either of your departments, calculated how much this carbon tax would cost Canadian families? Has anybody calculated that?
We've done a range of basic modeling and analysis, and we've...
Good. Can you tell us then, for a median income family, how much would they pay typically on the original tax?
I don't have that information.
Will you commit now that you'll provide the committee with that information before we pass this bill?
I can't make that commitment.
Why is that?
The government's position, based on the analysis that we've provided them, is that the impact on households cannot be determined at this time.
You just said you did modeling. Okay, so you have the modeling, you have the numbers, you're just keeping it secret. Thank you. That's all we need to know.
That's actually not what I said.
Okay, Mr. McLeod, and just for the committee's information, when we're dealing with officials, we're not under, I know some people are getting antsy over the amount of time spent with one member, but members have the right to question officials on the Budget Implementation Act until all questions are exhausted. So, Mr. McLeod, then Ms. O'Connell, then Madame Laprantles. Mr. McLeod.
Thank you, and thank you to the people that are joined us here to talk about the budget. I'm from the Northwest Territories, and the issue of carbon pricing was something that had created a lot of discussion, and the government of Northwest Territories has put together their plans and is ready to move forward. There was some things that we still needed to work out, including how it impacted our formula financing agreement in terms of own source revenues and clawbacks, and I think we're just about there. We still have some concern, though, given that the Northwest Territories is very remote, along with the other two territories, Yukon and Nunavut. We get all our supplies from other jurisdictions. For us, mostly Alberta. Yukon gets a lot from BC, and Nunavut is from Ontario and Quebec. So any project, any kind of activity requires us to get products from other jurisdictions. And there is already carbon pricing in other jurisdictions in BC, Alberta, Ontario, Quebec. So we are already paying for carbon pollution that's included in some of the products that we pick up. Now, is there a mechanism to prevent us from paying twice? Once we get the product in the north, and if it's resold, or is there a way from protecting us from that? Because we could get a double impact on this if we don't do it properly.
So we, in the Pan-Canadian framework, we, the federal government committed to work with the 3 territories to estimate the impacts of carbon pricing on the territories. And during the course of 2017, our 2 departments worked closely with each of the territories and produced 3 studies that we shared with each territory. And those studies did indeed confirm that there will be direct and indirect impacts of carbon pricing. And some of those indirect impacts, as you mentioned, will arise from the fact that goods that are purchased from other jurisdictions will already have a carbon price embedded in them. Your question is about whether there's a risk of double payment of carbon pricing, and it's our view that there is no risk of that, and I'll explain why. So if I don't mean to demean the significance of the question, but let's just take a simple example: a loaf of bread that's manufactured or produced in a province and then shipped north. The fuel used to produce that bread would have been subject to a carbon price, so there will be a carbon price embedded in the cost of that loaf of bread. But there won't be an additional carbon price imposed on that loaf of bread in the Northwest Territories. The only way that bread might be, the cost of that bread might increase as a result of carbon pricing is because of additional transportation costs associated with moving it to the store, and there may be a price on that fuel. So the price, but that wouldn't be a price. That would be a price on that particular fuel used to move the bread, not an additional price on the production of the loaf of bread itself. So that's kind of one example. Another is fuel is subject to the carbon levy in the federal backstop system, and the system that the Northwest Territories government is developing is also a levy system. So the levy is imposed on a fuel supplier or a distributor. So if the fuel supplier is south of 60, then the fuel supplier would be paying the carbon price south of 60 only. If the fuel supplier is located in the Northwest Territories, then the fuel supplier will be paying it there. But there aren't 2 fuel suppliers paying 2 separate carbon taxes.
And I'm glad you brought up fuel, because that's where I was going to go with my next question. And there is carbon pricing on fuels, and fuels is used in all modes of transportation. And in the Northwest Territories and Nunavut and Yukon, we used a lot of air travel to go between the small communities. And I just traveled to the communities that I represent on the coast, on the Beaufort Sea. And I listened to parents that were actually in tears because they couldn't go visit their family in the next community or in the regional center because it's so expensive. And so now we're gonna include a carbon price that's going to make it a little more challenging to do that. But if they flew out of the country, they wouldn't have that problem, because we don't have a carbon pricing on interjurisdictional sea or air transportation. Why is that? Why is there a difference? How did we come to that conclusion?
So it's may be useful to think of three types of air transportation: international transportation from one country to another, what we've called interjurisdictional, say from Yukon to Northwest Territories or Ontario to Quebec. So from one jurisdiction in Canada to another, and intra-jurisdictional. International aviation is going to be subject to carbon pricing starting in 2020 under a regime that Canada has signed on to, that was negotiated under under IATA, which is the International Aviation Association. So all of the large countries and all the major airlines in the world have agreed to be part of this system, and it was essential that it be an international system, because you can imagine that it would be difficult for one jurisdiction alone to put a price on international aviation fuels. The airlines would simply fill up their planes somewhere else. So Canada was part of negotiation of this system. This will apply in 2020. So for that reason, no province and the federal backstop system do not apply to international. Interjurisdictional, province to province, territory to territory, is not covered at the moment. What we have said, Ministers McKenna and Morneau have said that this is a gap that they intend to address. They have not decided how to address it. The reason that it's a gap is because no jurisdiction currently addresses interprovincial or interterritorial flights. This may be the one area where the federal backstop applies in more than just provinces that don't have a pricing system. We may need the backstop to also apply in provinces that have a pricing system but that do not address interjurisdictional aviation. This would be a complicated interjurisdictional discussion. The decision was, let's get this system up and running, and then let's start those discussions. I was in Yellowknife last week talking with the Deputy Minister of Finance, and made a commitment to the Deputy of Finance and Environment that they would be involved in those discussions, and that one of the options, making no commitment as to the outcome because that will be politically decided, but one of the options clearly could be to have a different system for interjurisdictional as between provinces and interjurisdictional going to the territories. But at the moment, none of those flights are priced. Intra-jurisdictional aviation fuel is priced under the backstop system. That's something that can be completely controlled by the backstop or by an individual province, and consistent with the government's policy that pricing should apply to a broad suite of activities. It's included in the backstop system. Sorry, the final point I'd make, though, is that we're also in extensive discussions with each of the three territories about offering the services of the Canada Revenue Agency to provide whatever rebate system each territory wants to implement in order to address, for example, impacts on households in remote communities of increased aviation costs, if the territorial government so chooses.
Mm-hmm. I think in the north, and you probably heard this, that we're quite concerned about the climate change impacts, and it's creating a lot of havoc, especially on infrastructure in our roads. Some of the roads that we just redone and refurbished, and it was nice 2 years ago. It's already heaving. I drive on it all the time. And it's something that's going to continue to plague us. Our airports are starting to see heaving. So it's going to be significant over the next while, and it's going to continue. And this is a mechanism to try to control that. And however, we know that the impact is going to also affect us. And it's going to affect us more in our smaller communities. Yellowknife will be affected. Our regional center. However, we figure that the communities where air travel is required and At the same time, they have lower income. It's going to be a challenge to make this work. But I think the government of Northwest Territories has done a good job in their planning. However, if there was a requirement to make an amendment, to make a change, is there flexibility in this whole process to 2 years from now to make an adjustment that could help offset some of the hardships that it may cause that we may not recognize today?
So, under the Pan-Canadian framework, the First Ministers agreed to quite a few things, but I'll mention three. First, put in place carbon pricing throughout Canada, but second, to do put in place carbon pricing with a carbon price that goes to $50 in 2022, and then to conduct a review of the impacts of carbon pricing before 2022 with the purpose of determining where carbon pricing goes. In addition, they also committed to an interim review in 2020. So precisely the 2-year period that you're talking about, there's a commitment to undertake a review, and that will be an interjurisdictional review that will involve all the provinces and territories and the federal government, and that will provide findings of impacts to date and recommendations going forward. As parliamentarians, it's always in your authority to amend legislation. Similarly, many of the details of the actual federal carbon pricing system will be in regulations, and those can also be amended.
Ms. O'Connell.
Thank you, Mr. Chair. Thank you for being here. So I wanted to talk about following up on Mr. Poilievre's questions. I hadn't had a chance to read your study, but I quickly went through it now, that was released yesterday. And Mr. Poilievre talked about modeling. Maybe he hasn't had a chance to read it either. We'll let him get caught up. But it actually speaks specifically to modeling in Appendix 1. And some of the characteristics of why it's not a secret that you can't provide the number. It's the fact that there are a variety of characteristics that need to be incorporated and need to be looked at. So let's talk about some of them that are in black and white, not a secret. But again, that's not a catchy catchphrase or a hashtag. So some of the characteristics are going to be provincial production and consumption patterns through a detailed input-output table, and links provinces via bilateral trade. Each province and territory is explicitly represented as a region. It later goes on to talk about the baseline for the macroeconomic analysis is Canada's 2017 GHG reference case that was reported in Canada's 7th National Communication and 3rd Biannual Report to the United Nations. It includes future impact and policy measures taken by federal, provincial, and territorial governments as of November 1st, 2017, all important factors that I would think would need to go into modeling. In forecasting, key macroeconomic variables in the model, such as GDP, the exchange rate, inflation rate, and are all aligned to Finance Canada's projections. So I guess my question would be, and it actually goes on to talk about things like gas consumption by each province, consumption of other goods, and this is what makes it so difficult to try and put a specific number, because obviously it's going to matter dramatically in each region. Mr. McLeod just talked about some examples of how the North might be impacted differently. What are the dangers from using outdated memos not related to this bill, and not actually waiting for provinces and territories to come forward with their plan, with the economics provided in that region that's specific to those people, and instead using fear-mongering and conservative tactics of just, let's just put some random number on it instead of waiting for provinces and territories to actually come back and work with the federal government. I know it's a new concept in terms of partnerships with provinces and territories, but what is the risk of using outdated economic information, modeling that is not relevant to regional differences in this country? And again, the ability for provinces and territories to design their own system that will provide the best return of the carbon pricing revenues back to the consumers who probably need it most. So what is the basis of ensuring that all of these factors are kept into account, and why this bill is focused on modeling that respects regional diversity? Why was that so important to Environment and Finance Canada?
Take it. Mr. Moffat?
Well, I can.
You don't have to get the partisan part that I put in there, but in terms of the economics,
I hope not.
I have to level it a little.
When the government developed its commitment to pan-Canadian carbon pollution pricing in late 2016, three jurisdictions already had carbon pricing, and Ontario had already announced its intention to join the Quebec-California cap-and-trade system. So we had the four provinces with the bulk of Canadian population already implementing or committed to carbon pricing. The government decided not to impose a single carbon pricing system on Canada, which would have required replacing the four existing systems, and instead decided to move in a stepwise fashion, where the first step was to articulate a commitment to ensure that there was a reasonably consistent approach to carbon pricing across Canada, but that respected two things. First, the existing systems, and second, the flexibility and jurisdiction of the remaining provinces and territories to develop their own systems, provided those systems aligned with a core set of criteria. In that way, the government's goal was to ensure that carbon pricing applied throughout Canada, so that a price signal was sent to a broad range of activities, and to ensure coherence and as much efficiency as possible, and to send a signal to other countries and businesses planning to invest in Canada that Canada was committed to carbon pricing. And then the final element was a commitment to this bill, to the system that is codified in this bill, which is a federal system that could be used in jurisdictions that choose not to develop a system that aligns. So the government has elected to implement carbon pricing throughout Canada, but in a way that allows each jurisdiction both the flexibility to design their own system, and even if they choose or have imposed on them the federal system, the flexibility to use the carbon pricing revenue as they see fit. So given all of those policy choices, then we come to the difficult question of what will the precise impact be on a household in a given jurisdiction. And the simple answer is it depends, and it depends on a number of factors, some of which are articulated in that broad framework document that we published in late 2016, some of which are articulated in the details of the backstop legislation, but some of which have not yet been decided and will not be decided until at the end of this year. Ministers McKenna and Morneau have given provincial and territorial premiers, have asked them to submit information about their systems and their plans by September 1st of this year. So it won't be until then that we have all the details in place.
Thank you. And that was part of my next point, was the deadline or the ask for having those plans in place, because that's also in this document. You started to talk about an example in Alberta, and Mr. Polyev, I think cut you off a little bit before you finished, but can you talk about the example in Alberta where, or any jurisdiction that have already somewhat indicated what their plan might be, and how they plan on returning or using the revenues to offset any costs? Do you have any of those based on the jurisdiction's kind of intentions so far? Granted that I know, they still have time to come up with these detailed plans.
So, sorry if you just bear with me for a second. The study that I mentioned, it has on page 7 and 8 some examples of the ways in which provinces with existing carbon pricing systems are investing some of their revenues. Each of those jurisdictions has is sort of pursuing what you might call a portfolio approach. So they have not said every cent will be dedicated to A or B. Instead, they generally are using them for a variety of things with relative emphasis differing from province to province. So the major emphasis in British Columbia is on a revenue neutral system, which means that the carbon pricing revenue is being used in one way or another to reduce various forms of taxation so that to overall government revenues remain neutral. So the example provided in the paper is that this year BC plans to invest its carbon pricing revenues in reducing the medical service plan premium by about half, and also cutting personal income tax and small business corporate income taxes. Other provinces have done some fiscal rebalancing, but have also chosen to take the money and return it directly to households. So, for example, Alberta has a rebate system in place that is tailored to household income. And as I said, the government of Alberta estimates that about 60% of households will be made whole through this rebate. Ontario and Quebec are providing some rebates, but also using the money to make the money available to households and businesses to invest in energy efficiency schemes, they're also pooling the money in large technology funds that will be made available to businesses and innovators to develop and deploy clean technology. So there's a variety of ways in which revenues are being used, and indeed that's consistent with the advice of most sort of academic and policy reviews of carbon pricing in Canada and internationally. And in Canada, most prominently, the Eco-Fiscal Commission published a fairly significant study of carbon pricing revenues, and essentially recommended that revenues be used in a variety of ways to address whatever the most salient policy goals of the jurisdiction are.
Okay, just to give everyone an idea where we are at on the list, next will be Mr. Dussault, then Ms. Lampropoulos, then Mr. Fergus, then Mr. Polyev. That's what I have on my list at the moment. Mr. Dussault.
Merci.
Thank you. My first question will be on the duty to report to Parliament. I think it was in clause 270, and it's a duty to report to Parliament on the second anniversary of this being enacted. So I wondered why you chose 2 years. Normally, we see the following year this request or this duty to report after the enactment of legislation. So why did you choose the second anniversary? Is there a particular logic to that? Thank you. It's a good question.
So we did think about this carefully. The reason for deciding on the second anniversary is because the system will the results of the system will not be clear for about a year and a half. And the reason for that is that although the carbon price, the system has two components, the charge and the output-based pricing system. The charge will be paid on a regular basis once it's imposed, once it comes into force. The output-based pricing system, by contrast, is paid on an annual basis at the end of each year. So the carbon pricing backstop system will come into force January 1st, 2019. So that's about half a year from now. And then a large facility that is subject to that system, its obligation for the first year will be to track its emissions. And then at the end of that year, so in the winter of 2020, it will then report its emissions and calculate how much it owes. And then it will pay what it owes, if it owes anything. So the payment that it makes will not be made until the middle of 2020. So in other words, we will not know precisely who has paid what under the system until the middle of 2020. And it's for that reason that we decided that the first report should be a complete report and talk about where the system was applied, and what jurisdictions it applied, how much charge was paid by whom, and how much of the output-based pricing system charges were paid and by whom. And again, we won't have all that information in place because all those activities will not have occurred until about the middle of 2020. And that's why we picked 2 years. But then the obligation is an annual report thereafter.
Merci. Ouais, l'autre question, c'était plus sur...
Thank you. The other question was a little bit more complex about the mechanism of the circumstances under which a certificate for exemption could be issued. That is to say, some people will be exempted, and I think the best example would be farmers. So could one of you explain a little bit how this exemption system would work and what the mechanism is that will allow the people who are exempted to have the system work properly? I'd like to hear a bit more about that mechanism. So in Part 1 of the bill, there are situations under which some people, will have the right to use certificates for exemptions. And if you want to talk specifically about farmers, I can speak to that. But generally, as I explained in my presentation the other day, the people who are paying the fuel charge, are distributors or wholesalers who are selling. So it's not the person who's buying, generally speaking, who pays that. So what does the certificate of exemption allow? Well, if an exemption is allowed and it's done in a valid way, it allows the supplier of the fuel to not pay the charge on the fuel, given that he's not paying the charge. The value of it is therefore not included in the sale price of the person selling the fuel. In a situation where a farmer will want to be given a certificate for exemption, it's not something that the Canada Revenue Agency gives to the farmer. It's the farmer that produces it according to the way in which the CRA would specify it. So there are a certain number of conditions that have to be included in the certificate. So what is a certificate of exemption? Well, it says that a person is doing certain things, and if those are verified, the person would not be levied the charge. So there are 4 things that the farmer has to certify in this document. First of all, he has to certify that they are indeed a farmer or farm producer. They have to certify that the fuel is delivered to a place that is a farm. I don't know if farm is the best term, but a place where there are agricultural operations being carried out. The third condition is that the fuel will be used exclusively for residual farm equipment. So farm equipment that's eligible. And the fourth condition is that all or almost all the fuel will be used for agricultural activities that are eligible. So if those 4 conditions are met, the distributor does not have to pay the fuel charge himself, and the farmer doesn't have to assume those costs either. So the concept of farmers and eligible farm activities are all terms that are defined in the Act or in the bill. For example, a farmer is defined as a person that carries on the business of farming with a reasonable expectation of profit. And the eligible farm machinery is property that is primarily used for farming, and it has to be either a farm truck, a tractor, a vehicle that is not licensed, or a portable engine, and it also has to be a vehicle that doesn't have plates to operate on a public road. However, these eligible pieces of farm machinery does not include a car under the Income Tax Act, and does not include assets that are used for heating or cooling a building or a similar structure. This is very interesting. It does seem rather complex for the average farmer to understand all of that, but my question is, because you mentioned all of the rules and the 4 requirements, who is going to apply those rules? I imagine it would be the Canada Revenue Agency, but how are they going to manage to adapt to these new regulations and enforce them? Are you going to go out personally to these farms to ensure that this fuel is being used appropriately on eligible farming machinery? How is that mechanism going to work when this is in force? Well, as is the case with other legislation that is enforced by the Canada Revenue Agency, they rely on self-reporting. And one advantage for farmers, which I hadn't mentioned, is that compared to the average for most people who have the right to use these certificates of exemption, is to be registered with the CRA and to produce monthly statements. For farmers, we don't have that requirement. They don't need to be registered for the purposes of this act. But the Canada Revenue Agency does audits from time to time, and when they do so, they will just ask for information, and they'll administer this in the similar ways that they do for other legislation that they administer. And if ever a farmer produces a certificate for exemption and then takes the fuel and sells it to someone else, there are rules to ensure that there isn't some diversion of the fuel in order that the general structure of the legislation be respected. So another aspect of how it functions, the fuel provider I mean, it will be a lot easier for someone who deals exclusively with farmers to sell to them rather than selling to other clients. So in a perfect case, the supplier would deal only with farmers and would be exempted for all of the fuel. But in a case where the supplier has more than one client and they're not all farmers, how can the supplier really make the distinction between which one should be exempted from the fuel charges and for those quantities involved? How does that work? Well, the first criteria is that the distributor have such a certificate of exemption. So if he's delivering fuel to a service station, the service station doesn't have any such certificate, so he knows that there won't be an exemption certificate presented there, and he will decide on the cost of the fuel in the knowledge that that fuel charge will have to be included in the fuel sold to that service station. Whereas if he's going to deliver fuel to a farmer on the farm, I presume that he's going to be reminded ahead of time that the client will say, I'm a farmer, can you deliver X amount of fuel to me, and I will show you my exemption certificate, and the price can be determined in that way. So the fuel charge,
have similar arrangements with their provincial sales taxes on fuels. So many farmers would already be familiar with the distinction and already have the arrangements put in place to not pay fuel tax on fuels. Indeed, in many jurisdictions, those fuels are actually colored so that they can be easily distinguished. So I appreciate that there is some administrative complexity, but just the point is that farmers already are already used to that system, and we're trying to mirror as much as possible the existing arrangements that are in place.
All farms have bulk. I don't know any farms that don't have bulk storage on the farm. And in our province, they, as you said, John, mark the gasoline. They put a coloring in it, and therefore that would show up if it was, say, used in your passenger car. That's the way it works in some provinces, but I don't think there's an indication here to mark the fuel, as I understand it in this case. Any further questions here? Just one other one on this, because I know we'll get questions on this. I think Mr. Marcel, you said on basically trucks that don't have plates to operate on a public road. So what happens in the case of a potato farmer or a grain farmer that is hauling their harvested crop from their field to their farm bins in the yard? Are farmers allowed to use the exemption on those vehicles or not? I can understand it if it's hauling from the farm to the elevator system to ship, but what happens about trucks on the road that are just really going from field to farm?
If the transportation is between a location at a farm to another location at a farm, it doesn't have to be the same farm. The fuel could be, the exemption certificate could be used to get the levy out on that fuel.
So but those trucks in many cases, it depends on the province. Some provinces have farm plates on their trucks, some don't, but they are used for the operation of the farm. And I think you said doesn't have plates to operate on a public road.
Well, I said both. It can be a farm truck, or it can be a tractor, or a vehicle that is not licensed to operate on public roads.
Okay, and one other question before I go to the other side. Are fishermen entitled to an exemption as well in terms of their fishing boats? Do you know?
They are not.
They are not. So the exemption is there for fishermen, for farmers, and not for fishermen.
That's what the legislation provides.
Okay, Ms. Lampropoulos.
Yes. So thank you for being here to take questions. And I'm not usually sitting on this committee, so if I'm a little bit, forgive me for my questions if they're a little too general. But I did have a couple of questions. And first of all, we know that putting a price on carbon is obviously going to cost Canadians. Still, it's something that I think a lot of Canadians are ready for. They realize that we need to act fast in order to help the environment. And I know at least that's true for the residents in my riding of Saint Laurent. So can someone please tell me what the environmental risks of not implementing a price on carbon would be?
I'll try to answer that question. I'm not. I think the goal of the Canadian government is in pricing carbon. I would say is threefold. I mean, first of all, the government believes that Canada should do its part, along with the rest of the world, in trying to mitigate greenhouse gas emissions. Canada on its own cannot prevent climate change from occurring. On the other hand, if we fail to act, then it's the government's view that we have no basis to argue that other countries should act. So we need to act is the government's position. Then the question is, well, how should we act? And in the Pan-Canadian framework, the government explained, or along with First Ministers, developed a strategy that puts carbon pricing as a foundational element, but not as the exclusive element. And the reason for that is, the reason for it being a foundational element is because carbon pricing is the most economically efficient way to reduce emissions, because it provides maximum flexibility as to how emission reductions occur, as compared to a regulation, for example, that prescribes action, or a financial subsidy, which targets certain activities. So that's the basic reason for choosing carbon pricing. On the other hand, the Pan-Canadian framework also includes complementary regulatory measures and spending. And complementary regulatory measures are needed to address issues that can't be addressed by pricing. In some cases, pricing simply won't work. In other cases, pricing might not work fast enough. So we want to ensure, for example, that energy generation utilities no longer invest in coal-fired electricity generation facilities. Those are multi-million-dollar facilities that have a lifetime of decades. In order to ensure that no new facilities are built, and then to ensure that they're not continue to operate for another 20 or 30 years, or to avoid having them built and then mothballed and basically losing, parking all that money in stranded capital. The government has elected to also regulate certain activities. And then in addition, in order to address some well-known market failures or challenges in stimulating innovation in technology, the government has chosen to also provide financial support for clean technology. So that's the overall approach. Then what's the risk of not including carbon pricing in that suite of activities? And the simple answer is that so if we take the first point, we need to do our part, we need to reach our Paris goal, then the alternative would be to choose some other suite of measures that doesn't include carbon pricing in order to achieve that goal. And those measures, by definition, in the absence of carbon pricing, would cost the Canadian economy more because they would be less efficient.
Thank you very much. So obviously we need to act fast, and this is the most efficient way of doing so. So I don't see us as having another choice. But I would like to know, I know that a lot of the provinces have already some kind of plan. Some of the provinces have a plan, others don't. Regardless of whether or not they do have a plan, whether it's going to be implemented by the federal government if they don't have a plan, how do we plan on working with the provinces to ensure that the revenues go to the right place, ensure that they go towards a greener economy?
Well, so we are working very closely with the provinces, but primarily at the moment, our efforts are focused on helping those jurisdictions decide whether to implement their own pricing system, and if so, how to design that system in a way that makes best sense for their jurisdiction, or whether it makes sense for them to agree to have the federal backstop applied. That's been a major focus of both of our departments over the past year. The question of how provinces and territories would spend revenue that flows from their own systems or the federal system is a different question. And the government has, I guess there are two things I would point to. First of all, in the lead up to the Pan-Canadian framework, the provinces, territories, and federal government put in place 4 working groups to explore the range of activities that should be done to address climate change in Canada. One of those was a working group on carbon pricing that Mr. Coulombe and I had the pleasure of working on. And that working group issued a consensus report that included a number of principles, and those principles included some general directions around the way in which carbon pricing revenues ought to be deployed, not exclusively, but consideration should be given to, for example, to disadvantaged households and to people in remote communities, etc., but also to supporting clean technologies. So there's a set of principles that jurisdictions have generally agreed to. On the other hand, the federal government has made it clear that it is not imposing any conditions on the way in which jurisdictions use revenue from their own systems. So Ontario has a pricing system. The federal government has nothing to say in terms of climate change around the way that money is spent by the Ontario government. Similarly, Minister McKenna has made it clear that if a jurisdiction asks the federal government to impose the backstop, the money will go directly back to the government, and there will be no conditions on the way that money is spent. Of course, we can have discussions about...
You mean back to the provincial government?
Sorry. Yes, to the government of that jurisdiction, provincial or territorial. Yeah, sorry. So with no condition, no strings attached, if you will. As Mr. Poiliev pointed out, there's another provision in the bill that authorizes that, while it requires the government to return the money to the jurisdiction, it authorizes the federal government to decide how to return the money. And so so there is a possibility that in some cases where the federal government imposes the backstop, the federal government may decide to return the money in some way other than directly to the government of that jurisdiction. The policy decision about the way in which that money would be returned has not yet been articulated. And indeed, I believe that a prerequisite would be to designate Is that right? Designate the persons to whom that money is spent or returned by regulation. And so that will be a matter for regulations, which again would be a matter for public discussion before they're promulgated, before they're finalized.
Okay, thank you. And last but not least, I'd like to know if there are any measures being taken to protect consumers and businesses. I mean, obviously, like we said, we have to put this price on carbon, but are there any protections being put in place?
So at the moment, there are sort of three things that I would point to. One, and I apologize for repeating myself, but the provinces will have discretion, so they will be able to spend the money, the direct revenue. The existing jurisdictions are already putting in place various measures that are, at least in some cases, intended directly to address the increased costs associated with carbon pricing, whether that takes the form of a rebate or financial support to invest in energy efficiency, which will have the long-term impact of reducing your exposure to carbon pricing because you're using less carbon. So there's various measures that are being undertaken. Second, again, in the Pan-Canadian framework, there's a significant suite of or collection of spending programs, some of which are expressly designed to enable households and small businesses to make low-cost investments in things like energy efficiency, or in the case of remote communities, there's significant funding that's being made available to enable those communities to transition from their 100% reliance on diesel for the purpose of electricity generation to other renewable forms of energy for the bulk of their energy needs. So again, which will have the impact of reducing their exposure to carbon pricing. And then in the backstop system that's codified in the legislation before you today, the output-based pricing system is expressly designed to minimize any adverse competitiveness impacts, and it does that, as I said earlier, by pricing on the margin instead of pricing on every ton of emissions. So a company will have a standard. The standard will be in terms of emissions intensity. At the end of the year, it will report how much it produced and how much it emitted, and then it can calculate easily what its annual limit was. And if it emitted 10 tons more than its limit, it will owe a price on 10 tons versus all of its emissions. If it emitted 10 tons less than its limit, we will owe it 10 credits that it can then sell to Mr. Mercil's company because he's far less efficient than I am. So in that way, I face an incentive to reduce my emissions continuously. Even if I go below my limit, I face an incentive to continue to reduce them because I'm then generating something of value that I can sell. But the idea there is then we're reducing the total exposure to the price, which will minimize the impact on their competitiveness.
Thank you.
Okay, Mr. Fergus, and then back over to this side.
Merci beaucoup, Monsieur le Président.
Thank you very much, Mr. Chairman, and I'd like to thank all of the witnesses for being here today. I know it's not easy, given the fact that the last time you appeared before us, there were votes that interrupted the proceedings at that time. So my question is to Mr. Moffat or to Mr. Mercil or any of the other witnesses here today, in fact, and it concerns the service that my colleague from the opposition or what he was quoting. There was some information that he was seeking, and I think this is of interest to Canadians. Was this memo produced alongside the bill as it was being developed, the bill that we are currently studying, or with the report? That is to say, the document that the department just published yesterday on climate change. Thank you for the question, Mr. Fergus. Our understanding from access to information is that this memo was prepared during the transition period. So, as you know, Canadians must know that when there is an election, the Federal Public Service prepares a whole series of analyses and studies on different issues that are current at the time. And given the different election platforms, climate change and carbon pricing was indeed one of the issues that had been studied by various departments in Ottawa, including the Department of Finance. As a result, these memos that are prepared by the public service for future decision makers don't reflect political decisions, and the measures that are then adopted. It's just transition material, if you will. Now, as for the revision that has been asked for, and that's currently underway, officials from the Department of Finance will be working with the Information Commissioner's Office, and we will be involved in every stage of this review. But of course, I'm not in a position to elaborate on the subject now. This is something that has to follow its course. Thank you very much. That was very informative. And I think that for Canadians who are listening to us or who will be reading the transcripts of this committee meeting, it's very important to understand that these transition memos are developed, quite honestly, as might say in English, on the fly, to be of use to the new government, and that weren't done with the initiatives or decisions taken by the new government in terms of their policies before them. And so these policies are the result, these memos are the result of good work being done by our public service. So it really was a study that was done quickly, just to ensure that there was a smooth transition. Am I right to say that? Or does that reflect the situation correctly? Well, I would prefer not to expand on the study as such. I prefer to stick with what I said earlier. These are transitional measures, and it's just done to brief senior officials in the public service, and then following that, those senior officials are responsible for briefing the new government in place. All right, thank you. The second question I have is, once again, one that comes back to trying to better understand the government's commitment regarding what was set out in the bill. And with the new carbon pricing system, it's not the federal government that is going to cash in on those amounts. And indeed, we made a commitment, and it is reflected in the bill, that we will be sending that money back to each of the provincial or territorial jurisdictions. And once again, if you could just confirm that. the direct revenues that will be generated by the carbon pricing instruments in this bill, if in fact it comes into effect, there's still the possibility that all of the provinces and territories will decide to implement their own systems that are in order and in line with the federal standard. All of that direct revenue will be sent back to the jurisdiction of origin. If you look at the budget documents that were published on the 27th of February, you'll see that there's no income associated with this carbon pricing system. And I'll take this opportunity to say that this is not included in the supplementary information on tax measures because it's not a tax. The main measure is intended to reduce emissions, and it is a regulatory, it's a regulation for regarding emissions. Once again, Mr. Moffat has already answered this question, but once again, just to reinforce that, the idea is to use these measures to ensure that the best way to deal with this will be fine. So the underlying concept of with this bill, the philosophical basis of it is that once again we're going to leave the private sector to find the best ways to reduce their impact, because they will have the incentive to reduce their expenses and increase their efficiency in terms of their use that they make of carbon-based products.
Philosophical or the kind of conceptual underpinning of carbon pricing with one caveat, and that is that the carbon pricing applies beyond the private sector. So, right, it'll apply to households. As householders, you and I will make decisions based on, will we invest in energy efficiency? Will we change our windows? What kind of car will we buy? Will we take transit? Similarly, the public sector is a large consumer of fuel and goods, and the public sector will also face incentives provided by carbon pricing. Hospitals, government buildings, etc. So the idea is to apply the price as broadly as possible across the economy. But again, as you said, then the idea is provide complete flexibility as to how to respond to that price signal.
Mr. Chair, just very briefly, I'd just like to thank Mr. Moffat for bringing about that clarification. You're absolutely right, and it's just a way of making sure that people have full information to make the right choices as opposed to having it always externalized.
Okay, on my list I have Mr. Kamish and Mr. Alves. Anybody else put up their hands? I do have one question before I go to you, Mr. Kamish. In Section 192, which is the regulation section for the output-based pricing system, it says that you can, states there that you'll be able to make regulations on user fees. Do those user fees fall under the User Fees Services Act, or are they separate and apart from that? And can anybody answer that? Section 192. It's the regulations under the output-based pricing system. There's a number of areas where you can make regulations, and one of them, everything from the system for tracking compliance and accounts in the system to user fees to retention of records, etc. Do you know what they fall under? And while I'm at it, I guess if anybody is here from Treasury Board, I note that in our various sections, every Budget Implementation Act, we end up dealing with a number of departments. User fees now under the User Fees Services Act go up by inflation every year, which to me is a budgetary matter, even though it's not in the budget. I do believe that this committee should hear from somebody on Treasury Board on user fees annually, whether it's in the Budget Implementation Act or not, because it is fees going up. So if anybody hears from Finance, we'll be asking you to come forward on user fees at some point before we're done with this Budget Implementation Act. Has anybody got an answer on user fees?
Yes, Mr. Chair, thank you. With respect to 192 and providing for user fees, so there is no exemption to the User Service Act for this one, and mostly the intent here is to use it for instance, it could be used with respect to the tracking system that we will set up under Part 2 in the regulation. So there is no specific exemption from the User Service Act, or not sure if there's a new name now for this.
But my question is, does those user fees fall under the Service Fees Users Act? Some do, some don't. I know Health Canada's got fees that don't fall under that.
So these ones
and
will
if they fall under that act, they automatically go up by inflation every year, which I personally have a problem with, but that's just me. Anyway, so they do.
They do for those that will be set under that specific authority.
Okay, Mr. Commish.
Thank you, Mr. Chair. So as far as I can tell, the department has modeled the price of a carbon tax, but not modeled the cost to Canadians or families or income quintiles, in fact, any of it. The chair earlier said that the documentation released yesterday by the government, it's about 17 pages long, on the potential reductions in GHG emissions and some of the pricing, taxation on carbon, and that'll be done. So can we have an agreement then also that Mr. Moffat will produce to this committee the modeling that he spoke of, Mr. Chair? That all the documents, figures, and I'll ask you, Mr. Chair, procedurally.
Well, no. I don't know whether that information is available yet. I turn the question to Mr. Moffat. What I do know that on the earlier document that was available, I have it now. I hadn't seen it yesterday. So that was, I asked that it be made available to committee. Mr. Moffat will have to tell us what is available, and if whatever is available we want it, then we'll ask for it.
I want specifically the modeling that the member for Carleton, Mr. Poliver, spoke of. You referred to modeling, some basic modeling that was done by the Department of Finance. So will you make it available to this committee?
I cannot make that commitment at this time. In designing, in providing advice to ministers about options for carbon pricing and to inform the final design of this system. Of course, we did various kinds of legal, economic, and other analysis. That analysis was all prepared for the purpose of enabling government decisions, and at this time, I'm not. The government has. At this time, that information is not available publicly. What we've tried to do is summarize.
Pardon me, Mr. Moffat. So I understand the point that you're making, but we're now considering the Budget Implementation Act, over 500 pages of highly technical documentation. It's an omnibus bill that includes 200 pages on how the carbon tax will be imposed on Canadians and on provinces that don't want to have one. So I'm going to move a notice of motion that the committee ask that the Department of Finance produce the modeling that Mr. Moffat spoke of, including all figures attached to that documentation. And if that's okay, we can work on the wording separately, or just a notice that I'm going to be asking for.
That's fine.
I'd like to move to section 188 on the revenue side, so it's page 320. And it says here, because on an earlier exchange, Mr. Moffat and others have said so too, that it would be collected, this carbon tax, and then remitted back to the provinces. But in section 188B, it says persons are specified in the regulation or that meet criteria set out in the regulation. So who are these persons? It sounds to me like the federal government can remit directly to individuals the carbon tax rebates or whatever it is they're supposed to rebating. It refers specifically to section 178, which deals with overpayment. So how does this work? Is this carbon tax actually going to be remitted to provinces, or can it go directly to persons? Because that's the way I read that.
So the obligation is to return on the federal government to return the money to the jurisdiction from which it came. The government has two options. It can return the money directly to the government of that jurisdiction, or it can return the money to persons who are designated. And persons is a legal term of art which covers individuals and legal entities like corporations. So if the government chose to use the latter approach to return the money to designated persons, it would first have to develop regulations defining who those persons are. In other words, there would not...
Pardon me for interrupting you. What would happen if a province decided not to have a carbon tax or cancel the carbon tax during a fiscal year?
So the federal government, so the way this bill is structured, it has two main parts, charge and output-based pricing system. Either part can be imposed on its own, or they can be imposed together. And the way that occurs is by adding the name of a jurisdiction to a schedule in the Act by means of an order in council. So the government could, in your scenario where province X has a system that aligns with the national benchmark and then decides, no, we're scrapping that overnight, eliminates it, the federal government would then have the authority to issue an order in council, which would take some time, but could be done fairly quickly. And that would then identify that jurisdiction on the schedule, and either one or both parts of the backstop would then apply in that jurisdiction. So that could be done.
What's the backstop? Do you mean the carbon tax would continue?
Well, the federal system would then apply in place of the provincial system.
That's a funny way of doing a partnership. I've heard other Liberal members talk about it's not a partnership with provinces. So the people of Ontario and the people of Alberta back home in my province say no more carbon tax. They elect a government that wants to get rid of it. The federal government, through this piece of legislation, will impose it on people that have decided through the provincial electoral system to say no to it. Is that correct?
I'll answer the last part of the question. I think the first part was a statement, and the federal government has the authority, will have the authority under this bill to impose this carbon pricing system on any jurisdiction in Canada that does not have a pricing system that aligns with the national benchmark.
So they will essentially impose it when a provincial government refuses to do so, or because of an election where there's a change of government that has a different policy direction. The federal government, specifically the cabinet, can continue to impose it upon the people of a province, regardless of what local opinion says.
The federal
they have the
government,
mechanism.
The federal government will have that authority, yes.
Okay. Now I have a question about Section 17, which is much before, because it deals specifically individuals on charge not payable. So it's Section 17.2.4. It says a prescribed person, a person of a prescribed class, or a person meeting prescribed conditions if prescribed circumstances exist. Now that terminology, prescribed circumstances, appears 108 times in this piece of legislation, this omnibus bill. 108 times, which means that there's 108 times where the federal cabinet will decide the details. This bill's already over 500 pages long. Like it's probably the longest BIA I have read. 108 times. I don't even know what that section refers to. It says prescribed person, prescribed of a prescribed class, of a prescribed meeting, and it all talks about who will not pay the carbon tax. How many times does this appear in the legislation, and what is it meant to encompass? Like, why are these exemptions being provided for, and the mechanisms by which they'll be used to exempt people from paying the carbon tax? My impression was that the carbon tax was supposed to be broad-based in order to achieve the supposed environmental goals that the government of Canada has outlined, but you're giving yourselves here a whole bunch of latitude to exempt an entire group of people, class of people, in prescribed circumstances. So what does that mean, and who does this section, who is it supposed to encompass?
So the way this legislation was designed, there's a first part which is the fuel charge part, and there's a second part which is the output-based pricing system. The output-based pricing system is mainly an element that enables the making of regulation to implement the measure. In terms of the fuel charge, the government believes that the rules that are spelled out in here are enough to make the fuel charge operate. But this is a new scheme, and essentially regulatory powers were created, and the goal is essentially to use those powers to address situations that would occur, that would be raised by stakeholders or will be raised by the CRA in respect of the application of the charge that would not be in accordance with the policy intent. We have no experience with that particular mechanism where that is before you, but there's in a similar pricing mechanism, there's a risk of double pricing and there's a risk of absence of pricing. So the regulatory power there is there so that the government can quickly react to particular situation in order to essentially potentially close a loophole.
For interrupting you, but you just said double taxation, double taxing, double pricing.
In situation that we don't think they exist right now, but the fact this is a piece of legislation. Yes, it's 200 pages, but it's going to apply to infinitely complex situation in Canada where fuel is basically distributed. There's maybe situation that there's a risk that there'll be double pricing. I'm not saying there is. There's maybe a risk.
I can confirm it actually will be happening because there was an exchange between Mr. Fergus and Mr. Coulombe who talked about in French about tarification de carbone. The GST is going to be applied, the HST in some provinces is going to be applied on the carbon tax. That's already double taxation. So I can tell you it's already going to happen. It's $100+ million that is going to generate in revenue for the federal government. So that's already going to happen. Is that exemption, could that be used here? Like the reason I bring it up is you're going to exempt people from being taxed unfairly. Well, there's an entire electoral system designed around having their say at the provincial level to refuse to have the carbon tax. And so we have an election coming up in Ontario in June. There's an election coming up in Alberta in 2019, where there's a very strong chance those provincial governments will change their minds. Now,
Mr. Marcel answer the question first, and then we'll get back to that point. Mr. Marcel.
So essentially, we're not here to comment on potential political situation that may happen in Canada. We're here to describe what is the instrument that is presented in front of you. You just mentioned about the GST and the HST. This provision is not there to solve what you perceive as an issue. It's the policy decision that the GST HST applies on the final selling price of property or services, and in that it includes, gas tax and it will include carbon pricing because it'll be built in the price of the fuel that's going to be sold. What I'm talking about, the double imposition, would be a double imposition under this particular piece of legislation where it's not the intention.
Mr. Commish. Mr. Albus.
Great. Thank you, Mr. Chair, and thank you to our witnesses for coming and sharing what you can, although I'm getting the distinct impression there are many things you cannot. And I would hope that you would all appreciate in the back of your minds the role of parliamentarians like us all to hold the government to account. And that's something we certainly will do the next time we have the minister here. So in regards to the bill that's before us, first of all, was there any, did the Minister of Justice provide either department with a view on the constitutionality of the imposition of a federally imposed financial legislation in really what is areas under provincial jurisdiction. Provinces largely have used the energy levers, so to speak, and so my question would be, is there anything that says that this particular bill is constitutional and will survive any challenge in any court process?
I'm going to answer this, but I'm pretty sure you're not going to like the answer. But yeah, essentially, the government believes that the plan is legally sound, and essentially, I'm not at liberty, and no one on this panel is at liberty to discuss whether there was legal advice provided, and if it had been provided, it would be subject to solicitor-client privilege.
Okay. So again, belief, you said the government believes, and there's many things that my spouse would probably say that I believe that she disagrees with. So then that doesn't stop having a good conversation, but that really is for other, because the Premier of Saskatchewan says that his government believes that it's not. And so I simply will leave that line of questioning. However, the fact that we are not receiving any kind of modeling yet, or that this is being subject to client solicitor privilege, does not lend itself to belief, in my opinion, that it's 100% sound. Switching gears, though, I would then go to the modeling. Mr. Moffat, I believe actually you've probably authored several different replies to the Standing Joint Committee of the Scrutiny of Regulations on behalf of Environment Canada. Is that something you've done a number of times over the years?
Yes, I was the designated review officer for over 10 years for Environment Climate Change Canada.
Well, I feel that I already know you just by your correspondence, because many letters would have come in, and I think today is consistent with that. Just in regards to it, you mentioned earlier that the government is proceeding with pricing. So pricing, again, this is a Pigouvian tax. It's basically by raising the price, that will alter the way that people respond in a market. Again, this is just basic microeconomics. And since you're only modeling really Northwest Territories, Nunavut, and Saskatchewan, because I believe most other jurisdictions this won't apply, why has there not been any economic modeling that's given for those provinces and for that province and territories?
So we, I guess a couple of points. First of all, this system is designed to be as durable and flexible as possible. So it's designed so that it can be applied anywhere in Canada. And as your colleague aptly pointed out, there may be some, it's conceivable that there will be changes in provincial policies in the short term. So it's conceivable that the backstop may be needed in more than those limited jurisdictions that you talked about. Second, we have actually done significant detailed analysis in conjunction with each of the three territories, and we've shared those studies with the three territories. We did that for the territories, so the analysis is the property of the territorial government. One of those governments has publicly shared that analysis. The others, I can't speak for, they're using it. I can't speak for their intention. So we have done detailed work with those jurisdictions. We've also been working closely with each of the other provinces, including to do modeling of various types of pricing options that they are each considering. PEI, New Brunswick, Newfoundland, Labrador, Nova Scotia, Manitoba, and we actually have a delegation of modelers and policy analysts going to the province of Saskatchewan in a couple of weeks to do exactly the same kind of analysis for that government. So we're providing our analytical capacity to those governments to enable them to make decisions, and then again, when they make a decision, we will all be able to know what the policy will look like and then be able to do a final modeling and disclose those results to Canadians.
Okay, so you'll only disclose after it has been imposed. Is that the intention of the government?
Sorry, that was my point was that after the province makes a decision. So if the province of so for example, the Northwest Territories are looking at their own system. They have announced an intention. They haven't fully disclosed all the details, understandably, because they are not all worked out yet. When they do, then it will be possible to do full modeling of the likely impact of that system. But we are deferring to that jurisdiction to allow them to make up their own mind and to announce their own system.
Territory has disclosed this already publicly.
I believe that Yukon has publicly disclosed their analysis. The Northwest Territories undertook an extensive engagement process with their residents to talk about the likely impact of pricing and different design options, both for pricing and for revenue use. And as I say, is now very close to finalizing a design, but I can't speak for what their plans are, when they plan to disclose that, and of course that's consistent with the normal development of any policy.
So what you're saying is the federal government has chosen not to allow parliamentarians to be able to have the information, but elected leaders from those jurisdictions, they will share that information between government to government. But it won't be for parliamentarians until after this legislation is passed, before there's any disclosure if a province or a territory does not cooperate with the regime that's being imposed.
Sorry, that's actually not what I was intended to say.
Well, if you could just answer that, is that the case?
No, that's not the case. What I'm trying to explain is that we are giving time to provinces and territories to make their own decision, and it's not for us it's not for the federal government to tell Canadians what the impact of a provincial decision might or might not be until that province has actually made up its own mind.
Okay.
Once it does, then that information will be made public.
Okay, well, just it'll be a little bit late for my purposes and in terms of where my interests are. And I've been very frank that I don't believe the Northwest Territories or the people of none of it should be imposed on this. I think we should be finding other ways. Anyway, getting on to a different subject then. In regards to the provisions around importation of fuel. So I believe the member McLeod had mentioned earlier that certain territories receive their fuels from different sources. The Northwest Territories gets it from Alberta. Obviously, that's not imported, but I believe he said that Nunavut, for example, will receive imported oil. Now, if it's purchased through, let's say, Quebec, then would they have to pay the cap and trade in Quebec, or because it's imported, that they would then pay this federal backstop price?
I cannot really talk about the system in Quebec because I'm not familiar with the system in Quebec. What I can say is that under this regime, essentially it's the fuel distributors are basically the people who would going to pay the charge. And there's a rule essentially to relieve if the fuel will be paid if it's delivered in a listed province being a jurisdiction that will be listed on Part 1 of Schedule 1. So there are rules for the bringing in of fuel in a listed province from another place in Canada. And in that case, the fuel charge under this system will apply. But there's also rules for relieving when the fuel is removed from a listed province to go somewhere else.
Okay, so is there equivalency, though? Because this is the question, is that if certain things are exempted under the cap and trade system of Quebec that are not exempted under this federal backstop regime that you've said here, then you have the same product being used by different people that will have different costs when it comes to the imposition of this. Is there equivalency? Shouldn't the federal government be more, again, if you're granting equivalency to provinces like Quebec and Ontario for cap and trade, shouldn't there be a bit of a more familiarity to ensure that there's not really essentially a different price on carbon depending on where you're from?
So other environmental legislation has a formal concept of equivalency. So under the Canadian Environmental Protection Act, the federal government has the authority to stand down a regulation that's promulgated under the Act when it enters into an agreement with another jurisdiction, whether that's a provincial territorial government or an Aboriginal government, that government has in place rules that are equivalent to those under CEPA. The government has chosen not to pursue the model of formal equivalency under this system because, as I explained earlier, when the federal government moved to impose pricing across Canada, we already had a situation where we had 4 provinces with pricing in place and 3 very different systems, each of which had a broadly similar scope of application, so applied to the same set of emissions, but which used different mechanisms. And as a result, cause different market prices, different carbon prices in the marketplace. So British Columbia has an explicit charge. Alberta has an explicit levy on fuel use. We know exactly what that carbon price is. For covered facilities in Ontario and Quebec, there's no legally established carbon price. Instead, there's a cap, which creates market pressure, which is then manifested in a market price, which may or may not be exactly the same as what occurs in British Columbia and Alberta. So we were not in a position to be able to say the carbon price throughout Canada must be X dollars, because it's not X dollars in those 4 jurisdictions, and it wouldn't make any sense to require it to be that exact price everywhere else. Instead, the federal government has provided the remaining 9 jurisdictions with exactly the same flexibility to choose their own system. If they do a cap and trade system, it needs to align with certain characteristics to make it essentially as rigorous and robust as the Ontario-Quebec system. If they rely on an express charge, then we need to see that price at $10 to $50 per ton. So long-winded answer, but the bottom line is there's no way in a situation where we already have different systems to insist on one single price across Canada.
Yeah, but again, if someone from Nunavut was to drive down and purchase the gas directly from and import it themselves right from the St. Lawrence, they would then pay perhaps a higher charge than someone in Quebec because it's treated differently under the cap and trade. I think that the former Premier of British Columbia, Christy Clark, had expressed real concerns around equivalency, and that the fact that this does not address that, I think that raises concerns for myself.
Okay, is there any other questioners? It'd be great if there's not. We can take one last question, and that way we don't have to call officials back again. We're those that are here for divisions 1, 2, and 3, and 4. My apologies. I know you came to get on today, but we're going to be
Mr.
out
Chair?
of time. Yeah, we'll get to you one sec, Tom. We'll have to schedule you in at another time. So my apologies, Mr. Commish.
I just want to make sure we're still on part 5 for the next meeting, because I have a whole section 50 about rebates that it's too long to get into in a 15-minute exchange. So I wanted to save it for another meeting.
And will you need officials from both finance and environment?
Well, if they both want to be there, it'd be more wonderful.
Okay, we'll have to schedule it in if that's the case. If it's going to take 15 minutes, we get no choice. Mr. Moffat, you wanted to say something?
Oh, I was just going to say we're at your disposal. So
Okay.
please, if you have further questions.
I know we have witnesses this afternoon and witnesses tomorrow, and we'll have to figure out when we reschedule you folks in, plus 20 divisions that we have yet to go through. So I think we're going to be probably meeting a little over time. With that, thank you for your officials for coming, those that we didn't get to and those that are at the table. Meeting adjourned, and we'll see everyone this afternoon.